High-yield savings accounts and interest rates. Imagine not having to risk a single dollar on stocks or cryptocurrency while you sleep. Does that sound like a dream? This is precisely what a high-yield savings account can accomplish, and it's more effective than ever in the current economic climate. Let's examine why these accounts are revolutionary for everyone trying to save more wisely. Number 8. What is a high-yield savings account? Similar to a supercharged version of a conventional savings account, a high-yield savings account, HYSA, is made to increase your money's performance without increasing risk. An HYSA can yield 4-5% APY or more, depending on the bank and market conditions, but a regular savings account might pay you an absurdly low 0.2-0.4% APY. The secret is that, in contrast to large brick-and-mortar banks, many of these accounts are provided by online banks, fintech platforms, or credit unions, which save millions in operating expenses. You receive higher interest as a result of those savings. Additionally, you can generate large profits without jeopardizing your capital because your money in a HYSA is federally insured up to $250,000, unlike investing in the stock market. These accounts are perfect for emergency cash, short-term savings, or even as a starting point for long-term financial planning because they combine safety, convenience, and surprisingly good growth. Number 7. Why interest rates matter in 2026. The growth of your money in a HYSA is driven by interest rates. In comparison to the previous 10 years, rates in 2026 are historically high, which presents a rare chance for savers. Top HYSAs are offering 4.5% APY, literally 10 times more than traditional banks, which are still stuck at around zero rates at 0.2-0.4% APY, barely keeping up with inflation. If you deposit $20,000 into an account with a 5% annual percentage yield APY, you will earn $1,000 simply by leaving your money there. These rates are a result of both central bank policies that have maintained high interest rates and the fierce competition between online banks for deposits. This is a once-in-a-decade window for savers, where investing in a secure, interest-bearing account truly yields significant, risk-free profits. Number 6. Top HYSA options you can use today. Not every high-yield account is made equally, and your earnings can vary significantly depending on the alternatives you choose. Among the top performers at the moment are Newtek Bank, which gives 4.35% APY with no minimum balance, and Varo, which offers up to 5% APY for eligible consumers. Bread Savings offers over 4% for customers who have a modest amount, while VioBank offers 4.16% APY with no monthly fees. It's evident that online banks frequently beat traditional banks and that their rates can significantly boost your savings in a matter of months. The APY isn't the only factor to take into mind when selecting an account. Fees, accessibility, and any prerequisites to obtain the greatest rates should also be taken into account. Choosing the incorrect account might result in annual losses of hundreds of dollars. Number 5. Benefits of high-yield savings accounts. There is much more to high-yield savings accounts than just a higher interest rate. First of all, your principal is secured regardless of market conditions because they are safe and federally insured. Second, unlike fixed-term assets like CDS, they are liquid, meaning you may rapidly access your money in an emergency. Thirdly, you don't have to watch charts or make investing decisions. Thus, they demand minimal effort. Because your funds are growing consistently and stress-free, they provide you with peace of mind. These accounts are ideal for young professionals, parents saving for immediate goals, or anybody seeking financial development without the danger and anxiety of investing, because even tiny sums can compound into significant amounts over time. Number 4. Common pitfalls to watch out for. Despite their benefits, HYSAs have some significant drawbacks. A 5% annual percentage yield APY now could decrease tomorrow based on market conditions because interest rates are subject to change. It's important to read the fine print because some accounts require minimum deposits or qualifying monthly activity, such as direct deposits, in order to receive the claimed APY. Additionally, many transfers and withdrawals are restricted by federal laws to 6 per month, which may affect accessibility if you require regular access. Finally, even a high APY may not always completely maintain purchasing power because inflation might diminish your real gains. You can select an account that maximizes benefits and minimizes shocks by being aware of these risks. Number 3, how to maximize your HYSA returns. You need strategy if you want to get the most out of a high-yield savings account. Start by choosing accounts with flexible access, low fees, and the highest practical APY. To guarantee consistent growth without having to think about it, automate monthly deposits. To disperse your money and maximize insurance coverage, think about opening many accounts. Instead of using your HYSA as a daily spending account, utilize it as a designated emergency or short-term savings vehicle because compounding is most effective when funds remain untouched. When you combine high APY with disciplined, continuous deposits over time, even small savings can grow into significant riches. Number 2, the power of compounding interest. The amazing part about HYSAs is compounding. Compound interest computes interest on both the principal and the interest already earned, which causes your savings to expand exponentially in contrast to simple interest, which just pays on your initial deposit. For instance, $10,000 in a 5% APY account earns somewhat more, roughly $512 after a year thanks to monthly compounding, rather than only $500. Compounding can produce a snowball effect over a number of years, increasing even modest donations to significant sums. For this reason, beginning early can significantly speed up your journey to financial security, even with modest quantities. Number 1, why 2026 is the perfect time for HYSAs. HYSAs are especially appealing in 2026 due to the state of the economy. Inflation is still an issue, interest rates are still historically high, and traditional banks are still lagging behind by offering yields that are almost zero. You may protect your money and capitalize on a rare opportunity for significant low-risk growth by putting your emergency fund or short-term savings in a high-yield account. In order to ensure that your money works as hard as possible without the stress of market swings, now is the perfect time for savers to prioritize liquidity and compound growth. HYSAs in 2026 are among the best tools accessible for anyone who is serious about establishing a solid financial foundation. High-yield savings accounts might sound boring, but in 2026, they're one of the smartest ways to make your money grow safely while you sleep. If you found this video helpful, make sure to hit that like button. It really helps us reach more people who want to save smarter. And don't forget to subscribe for more tips on building wealth, boosting your savings, and making your money work for you. Turn on the notification bell so you never miss a strategy that could change your financial future.